Hello and good morning, listeners. It's the end of the week, and we bring you the latest updates with Almus Market Mornings, your daily dose of global financial updates. Yesterday's move in rupee reminds me of SpaceX. Not Elon Musk or the company, but the rocket. It blasts up in the sky and lands back down with the same vigor, just like the move in rupee yesterday. We saw a spurt of sharp buying and then sharp selling the following day. While on the global front, we saw the iceberg lettuce outlast Liz Truss as the latter resigned yesterday as the Prime Minister of UK. But I truly think the turmoil in bond markets caused by the decisions of the British government is a case study material for most colleges. And all of us have the same reaction as King Charles. Dear oh dear. I'll borrow the term TGIF from my colleague Shikhar and say JK seems like the markets need to say TGIF. What's your take?
Yeah, definitely. Yes, we fortunately for India, we have a longer weekend, and Monday being a Diwali holiday. Um, Overnight, I think focus is on three matters. One is the rise in the yields, and then rise in USD above 150, and then the UK saga, which has continued. Uh, the global financial markets came under renewed pressure as yields rocketed higher again, with the 2, 10, and 30-year bonds all seeing new cycle highs. Markets expectation of terminal rate is now a few basis points higher than 5%, and that is something that market is still to discount. And if see, while US economic data has been supportive of higher yields, it is also exaggerated by illiquidity of the bond market. And government has, you know, big new issues which are higher than the past, and not finding enough bids at lower yields. At the same time, quantitative tightening, which is ongoing, is not finding too many buyers too. Foreign central banks are selling US bonds to raise dollar funds to intervene, to be used in protecting their currencies. So it's a combination of several factors. That it's not just economics, but it's a combination of several factors that is leading to higher yields. While yields do look attractive at current levels, we can only see a reversal with the improvement in inflation situation. And good analysts are not predicting hefty rate hikes so far have its effect on good analysts are actually predicting that the hefty rate hikes seen so far will have its effect in 2023, and most likely the tightening cycle to end then. Although how long the higher rates will remain will depend upon the evolving price situation. Then, of course, we had the yen, which has fallen to new 32-year low at 150.25. And it's, I mean, again, we are hearing more voices from Japanese officialdom, but just the voices, nothing. And market is getting more and more confident or complacent in selling the yen, and we are comfortably perched above 150. And yeah, why not? Because even an actual intervention may not have an effect without a policy change by Bank of Japan. Now, there are enough reasons why Bank of Japan should change their policy, because their core inflation number announced today came at 8-year high at 3%, and their inflation target is 2%. And whole world is raising rates, and yields are going up everywhere. And Japan is still on the yield curve control, and it's really a very, very artificial market. Now the fears of a bubble there is rising. Now, one reason why Bank of Japan might be continuing with it is, I think, the effect it will have on BOJ balance sheet, who are holding nearly 50% of all the JGBs, and more than 80% of all the new issuances that have come. So I think it is Bank of Japan has to prepare itself to face huge losses if the yield curve control is abundant or even modified from 0.25 to slightly higher level. And definitely this also portends that if there is a change in the policy, yen is likely to see a big strength. And there is a vast pool of Japanese yen which has been parked abroad in various foreign assets will come back to Japan if the yen starts to strengthen. And In fact, IMF figures show that Japan has almost 9.9 trillion of assets overseas. Even a fraction of it, if it is repatriated due to Japanese yen strengthening, will have a big move of Japanese yen. Now, these are all right now only expectations, and Bank of Japan is still steadfast in its policy. Um, but we are reaching a point when it has to have a break somewhere, and one should be really looking out for those big moves in the end, as we have seen in the past as well. And of course, in UK, while the economic turmoil was kind of addressed and markets were calmed after the new finance minister, Mr. Hunt, was appointed, PM Less came under pressure and actually resigned within 45 days of our assuming office, becoming one of the shortest tenures for a UK PM. Now, that is actually started to give another uncertainty in politics, because there are more than two contenders for the new post, including the former PM, Mr. Johnson. Although market indicates that Rishi Sunak will have has a lead, but it's not, nothing is certain, because even in the last contest, initially he was in the lead, and then the things changed later. A good thing is that they have decided that the leader will be appointed by coming Monday. Therefore, this uncertainty is not going to continue for too long, because I think how the policies will evolve going forward will depend a lot on the new leader. Although continuation of Mr. Hunt, who has been a strong figure in achieving the stability in the markets, will is also very key for the markets. Sterling has been moving in a range of 2% in the last few days, and that volatility is very much likely to continue. Economic data from US, of course, was mixed, and jobless claims came lower, last week. But US manufacturing index continues to contract, as depicted by the Philadelphia Fed Manufacturing Index. Importantly, the prices paid component was higher, so we have a contraction in the manufacturing, coupled with the inflation also higher. 6-month outlook is down minus 14.9 versus minus 3.9. So manufacturing and the housing sector, where even we saw a drop in the pending home sales, are definite sectors where we are seeing severe slowdown. In fact, Larry Summers, who has been, predicting about this high inflation and Fed rates going up for quite some time, is now predicting that US will have a recession next year. This follows a similar prediction by Jamie Dimon of JP Morgan. And he also says that unemployment is likely to reach 6%, and currently we are at 3.5%. So I think even as we end 2022, just about 2 months to end that, and we are at high rates of for several years. 2023 promises to be probably a two-way market for yields and rates, and as well as the economies. So that's as far as the prediction goes. But then we need to see how these rate hikes that have happened so far will have an impact on the price situation. As you said, down the rupee, yes, we are increasingly dependent on absence or presence of central bank for the direction in which we are moving. And as we have known, day before yesterday, we moved big on the upside when they moved away from the market from offering. And yesterday, when almost everybody was on the same side, they came and sold and brought down the market by almost 0.7%. So again, while the underlying trend for the dollar rupee is definitely up based on the global factors and also the domestic, or rather the India's external position, the central bank's influence cannot be ignored. And in fact, it is top on the factors that will determine the short-term moves. So really, what we can see now is that I think with the holidays coming up in the next week, probably market will be more keen to adjust their positions. Even the speculative positions might be somewhat reduced. So we should ideally expect a slightly narrower range between 80 to 70 and 80, 83, 20, 25. That's what I expect. Thank you.
Thank you, JK. And as you mentioned, it would be very interesting to see how everything plays out with the absence or presence of central bank and rupee, and also the British politics. It would be just so fascinating to see who gets elected and how long they last. So yields continue to rise. Yen is above 150, and even Chinese yuan is seeing some depreciation. We have Diwali on Monday, so we wish all of you, our listeners, a very happy Diwali from the Almus family and a very prosperous new year. We'll see you all on Tuesday with the latest round of updates. Thank you so much for listening.